Welcome, techies and scientists. This is another week in review, and today is 10:25. I'm recording this one on a Saturday, so the market will open tomorrow at 6 p.m. But let's do a quick review of how the market performed last week, and then we'll make some prognostication again for next week coming up. And boy, there will be a lot of stuff coming up next week, so look forward to that. So, like I promised last week on Sunday, I said that the price will probably more than likely gap up and then retrace lower. And then this is the potential area for retracement. 24,846. This is the area that I think it will probably retrace to, spend some time over there, and then come back up. Apparently, it did not do that. So what it did is it gap up and then retrace lower and then keep going higher and higher on Monday, and kind of went literally trace sideways from Monday afternoon all the way until Wednesday. So until on Wednesday morning when the market opened at 9 a.m. That's when we start seeing some downward pressure and eventually retrace where again to the area that I thought it would have retraced right here at 24,846, 24,835. So I'm gonna give myself an applause for that. Okay. So it did retrace in that area at some point, but it wasn't according to the plan that I think it would, but it eventually retraced in that area. So what they ended up doing, the trade back up in the afternoon, slightly retraced lower into this gap, and over the Asian session and London session in the morning, made a high here, and then made another high, and went lower during the AM session, and went back up again above this new week opening gap here. Got the CPI number at 8:30 a.m. This is when we have a huge gap up there. So I think it quickly traded lower, and then boom, in 1 minute candle, we had a big upward movement. So that's what, and in the 5 minute, this is what it looks like. So it looks the same, whether it was a 1 minute, 5 minute, 1 hour, it literally the candle looks the same. So this is where we are right now. So this is the price action we've received. So since then, and it's just been keep going back and forth and back and forth. I was able to trade some of this. I will cut another video on how to trade this particular area here, and it's not as difficult as you think it is. It's just it's very hard if you don't know exactly how to frame your trade. If you don't know what to look for, you can get hurt in this area because you're thinking, okay, if it went so far up, then it should be going lower, but not necessarily. There are some headlines, some levels you have to look at to see if it respects those levels, or if it goes past these levels, and then based on that, you'll be able to make a trade. So be on the lookout for that video coming up very soon here. So let us make some quick prognostication for next week. Okay, so next week we do have 5 of the 7 Magnificent 7 making the quarterly report earnings. So that will be Meta, Google, Microsoft, and that will be on Wednesday, October 29. And then we have Apple and Amazon on Thursday. And I believe most of them, if not all of them, will make the announcement after the market close. So there will be a lot more volatility. There's going to be a lot of volatility here. So I will tread lightly and be extremely careful. do have consumer sentiment coming up on Tuesday. So right at 10 a.m. So we do have consumer sentiment coming up. So just follow the ones that have the 3 stars. More than likely, it'll tell you that that will be a significant move coming up. So you have to watch out for that. Also, that same week on Wednesday, I believe we do have FOMC start at 2 p.m. Eastern. So there will be a Fed interest rate decision that will be coming up. I believe they were going to cut from 4.25 to 4%. So that would probably send the market up. So there will be quite a bit of volatility even within that 2 p.m. session, right? So 2 p.m. we will see a lot of movement either up or down. If it goes down at 2 p.m., more than likely after 2:30 or 2:45, you'll probably go back up. It'll be like a V-shaped recovery kind of thing. So you'll be able to see that live in price action. So I will say when it start at 2 p.m. from 2 to 2:30, whatever you see will probably be some sort of manipulation. Even if it goes up at 2 p.m., anticipate. That doesn't mean it will happen. I'll say anticipate that it will probably retrace lower and probably start trading sideways. And then at 4 p.m. that same day, when you have one of the Magnificent Seven reporting, then it might shoot up again. So there'll be a lot of back and forth. So I will be careful on Wednesday. Same thing on Thursday. And I believe Friday we have some report. It's the core price index PCE, and then there's a Chicago PMI at 945. But because of the government shutdown, we may not get much, right? So would not hold my breath on that one. And even for the CPI that we have last week, you know, even though the report says CPI delayed, when you check back and see how the price behave, right here, even though the government data was delayed, there was still a spike up, which kind of tell you at the end of the day, it doesn't matter whether the government is shut down, it doesn't matter what's going on. The market is gonna do what it's programmed to do. And yes, I said it. It's gonna do what it is programmed to do, what it's scripted to do. It's scripted to go up, it's gonna go up, whether government shut down or not. So I would not put a lot of emphasis of news events. Usually those news events they kind of like justify the reason why they push the market up and down. But at the end of the day, I'll say it doesn't matter much. The seasonal tendency in concern. Again, it's always gonna be my go-to here. It usually follow the path right along. As you can see, I highlighted here. There was a low here, and then there was a higher low here. Historically, here for over the past 20 years, there's a low and there's a higher low here. Hey, we're right on business. We're marching right on time. And then this is what I'm saying. We anticipate a lot of movement next week. It may go up, push up more, drop, just like it dropped here historically, go sideways for a little bit, go lower, and then right at around either before November or a couple days after November 4th, and then we'll start seeing some movement going back up. So I'll say be on the lookout for that. More than likely, there's going to be that sentiment of a December rally. So I'll say right after past Thanksgiving, things usually start to go up and up. So the seasonal tendency is this is what I'm going off right now, and this is just a roadmap. As you can see, it's not pound for pound, flesh for flesh. You can see it is just because historically on October 8th, price go down. That doesn't mean necessarily has to go down from October all the way until December. I think it will closely follow this pattern for the seasonal tendencies. So, with that being said, let me provide a little bit of prognostication of where I think things will fall in price here. So, I believe on Sunday, what may happen here, price will open up, gap a little bit lower, and I think it will significantly go lower to the level of 20, 25, 172. Um, and if you push below 125, I'm looking on the daily chart here. This is where I can make most of my prognostication. So there is this price range here. It looks like we'll finally come out of it. So more than likely, we may see price kind of fall back down again below this gap here, and then may slightly touch 476. So I think this is what in play. I mean, this range here from 25 394 and 24 158. I think this range is very significant that it may dip into it a little bit more. I mean, if it's really bullish, I think the lowest that it may go is 160.75. I think it may just come below that point here, dip into it in a little bit. And that 25 160 is also when I'm eyeing this here. This is the middle of this daily candle here, and it's at the upper top range of it's not the top range, like a 75 percentile of that top range. So I think price will just come back down into 25 160 and then keep pushing higher and higher, just like here in the seasonal tendencies. So it may dip down a little bit more that level right here, which is that 930. So yeah, so this is kind of like how you need to take a look at this and then to say, okay, historically, which level did it drop to? So we'll look at this 930 high here and then kind of drop into that level here. Okay, so if you were to drop, what was the highest high within that range to drop in 25 160 and then go keep pushing back up just like the seasonal tendencies? So this is my prognostication for next week. And again, there's another video that I'm going to cut out. It's going to show you how to trade within the small range here, especially when you reach an all-time high and then you see price going back and forth here. And then you have nothing else on the left hand side. You have no levels to look at. And the next best thing is to drop in a lower time frame, like a 4 hour or 1 hour, and then just use those levels to see where price can go or whatnot. So I'll cut out that video and then release it. Just be on the lookout. Thank you, y'all.